Could you tell us a little bit about yourself and your path to SmartStream?
I started out my career back mid-90s with Accenture, working on predominantly fintech solutions, business process automation, the inroads back then. Of course, it wasn't Accenture, it was Anderson Consulting, and up to 2007 I've been involved with various big five consulting firms, predominantly strategy, operational restructuring, and financial technology. In 2007, I was part of the Dubai government group to build fintech capabilities within the UAE, and that's when I was involved with the acquisition of SmartStream.
Okay.
And have been involved on the board for almost 10 years now, until I became CEO effectively beginning of April last year.
How would you characterize 2017 so far?
2017 has been a year of growth for us. Started out the turnaround program back in mid of 2016 that effectively helped us focus on our core solutions, grow our business, and 2017 is when this started delivering results. We have, as you'd probably have seen from the media and press releases, that we are aggressively pushing some new solution sets, working closely with our clients, identifying and understanding what they need, and upgrading our technology skill sets and toolbox with what's happening around us globally, whether it's a regulatory front or technology infrastructure.
What trends give you the most hope?
I think the willingness of financial institutions now to test new technologies. Previously, most of the big institutions were conservative. Now they're actively looking at distributed ledgers, e-currencies, AI, robotics, machine learning. So the adoption of new technologies within banks I think is no longer being opposed. It's becoming something that's accepted culturally and expected.
Also, what trends are causing you the most concern?
It's exactly those same trends, because as a result of that, there are a lot of what we believe short-lived bubbles that are going to surface and die. And we don't want to jump ship on new technologies and then realize that a few months down the line or a couple of years down the line, they're no longer valid. And as a result, put a bit of investment and not have it realize any potential.
Will the industry be moving toward neutralization?
I think mutualization is picking up differently at different paces globally. I mean, US, Europe are at the forefront, and it's being looked at on various components of the financial service sector, whether you're looking at insurance sector or bank sector, trading, different components. From our perspective, reference data utility has predominantly started up with a focus on the US market, and see its greater growth next year with the European financial institutions. Simply because the priorities of services required by US institutions is different than that of European institutions.
What do your clients think of the utility model?
I think the utilities model is a direction that the banks are still investigating. They're definitely heading towards. It's the question is, how do you mutualize the costs and build up those synergies that the financial institutions are expecting? I think it's not at very early stages, but it's heading there, and I think we'll see great strides in the next 2 to 3 years.
Could you give us an idea of what areas you're going to focus on in 2018?
I think in 2018 we'll continue our growth trajectory. In 2017 we have established close alliances with some of our key accounts in Asia, Europe, and the Americas, where we garnered a lot of the feedback on their strategic directions of those institutions. And that effectively has set up our plan for 2018 to 2020. We're, of course, continuing our focus on AI, new technologies like blockchain, distributed ledgers, and working with the financial institutions how we could address these effectively in the areas that will help them enhance their efficiencies, enhance operating costs and revenues, and at the same time help them address regulatory requirements globally.